Hi, this is Kirk with Forex Trading Secrets, and this is a little recording. I wanted to talk to you about how to make trades coming out of consolidation and how to manage them a little bit. So first of all, I've drawn a bunch of lines on here so that we can move through it quickly. Let's say that you decide to take a trade. It's best if you decide how you're going to set it up before you even get into it. Right here we have a potential entry signal. Right there's a great entry signal, and here's where you would potentially set your stop based on this trade setup. So there's a couple things you can do. The worst case that you should set it at is a 1-to-1 win-loss ratio. If you have 22 pips stop loss, make it 22 or more take profit. This one you could have done 30 even to 40 pips take profit on this one the way it turned out. But just be conservative. Let's say you put it at to the 1-to-1 and let it go. If you win 60-70% of the time, which you should if you are very patient in your selection of trades, then your account will continue to grow. But if you're more patient and do 2-to-1 or 3-to-1 and lose once in a while, you can still win 70% of the time, and you would really see your account growing. So that first concept is know where you're going to get in, where you're going to get out, and about how much profit you're going to have potential to make on the trade. Now, if it does go against you, you can cut it short. You don't have to let it ride clear to your stop loss. And if it looks like it's slowing down, you can get out of it before it reaches the take profit or turns and comes back on you also. Okay, let's say that we got in at this trade at the same place we were just talking about, and the trade starts taking off. Now, if the strength of the trade looks like it's going to continue to go, then you can use a trailing stop. You can set a set trailing stop of 20-30 pips and let it go until it just goes up and comes back and takes you out, or you can manage it. And when this bar right here is formed, you move the stop loss up to the bottom where I have this one marked. So I've zoomed in a little bit on this one. Now as the trade progresses and this next bar forms, you can, what we call the manual trailing stop, you can move it up to the bottom of this bar. As each continual bar forms, you keep on moving it up. When this bar forms, you move it up to the bottom of this bar up here. And when this last bar forms, then you can move it up just a little bit more, and you're probably going to get taken out on that one or the following one. You see, that's a great place to take it. Now, if you'd done that method, you would have had to continue to move your stop loss out further and just manually follow it, or take this take profit totally off and just manually manage it. When you get exit signals, get out of the trade. But in any case, once you figure that you're going to be winning on this trade, don't let it ever come back against you and wipe out hundreds of pips of profit. I see a lot of people, they get set in their minds that they're going to trade on a 4-hour time frame or a 1-day time frame, and so they manage it on that time frame. It goes 100-150 pips in their direction, and they're stubborn and think, well, that day chart, 4-hour chart says it's still going to go in that direction, and it comes back and takes them out for a 30 pip loss. Well, yes, it did turn and continue to go in that direction, but if they'd managed it, they could have had profits going up, possibly coming down, or don't even take the retracement trade and just get back in when it gives you a good signal going in the initial direction. You're coming out of this consolidation area again here, and it goes up and it hits your profit target. What do you do then? Don't sit back and say how great of a trader you are and think that you've conquered the world. Take it as one of those trades. You won or you lost. It's just another trade. Start looking for a re-entry in that trade direction of that trend again, or go look for another trade on another currency pair. So for example, let's go back a little bit. Say we had entered a trade back in this area, and you'd gone up and your signal said to get out, and you'd gotten out right here. Well, you're looking for another re-entry. If it's going to continue to go, if it turns and comes back on you, you get out. This one happened to give you signals, not just looking after the fact. There were positive signals right in this line right here, said that was continuing in that direction, and we could confirm that by looking at different time frames. Yes, that would have been a good place to get back in to the trade. So continually be trading, looking for trades. Now, say you get into a trade, the trade came down, you got in, and you got in a little bit late on this trade, and you entered someplace. Say you entered the trade right someplace in this area. It went a little bit, say you were going to do a sell. Went a little bit against you, came back a little bit in your favor, went a little bit against you. Well, if it goes quite a few time frames, this is an hour chart we're using here. If it goes 3 or 4 or 5 hours and it hasn't moved very many pips, close it as close to your entry point as possible. Take a few pips loss, a few pips profit. Just close that trade. You get some emotional strength back. It'll be easy to find other trades, and you won't be laboring over something. I see many people, they come out of a trade and they are hooked on a currency pair. And they come out of it down here and they keep on, when's it going to get back in? When I can get back? I want to get back in. When's it going to do? Don't worry about it. Go look for some other trade on another currency pair. Generally, in the course of a day, or at least for sure 2 or 3 days, there's something moving. If you can't find anything that's moving a given day, go do something else. Take a break. Clear your mind. Come back in a few days, and things will look a whole bunch better. It'll be fresh. The market will have changed. It'll be setting up, and you can then have from your watch list that you had just before you left, you can be looking for trades that are probably setting up now. You can get into some good trades. So those are a few ideas on how to trade coming out of a consolidation. Set up your take profit stop loss before you get into it. So the things you need to do is deal with it up front, so you know what's going to take place, and then let the trade go. Once your trade is profitable, then you can start trailing and manage the trade for more profit, or get out before it turns against you. The next thing you can do is, if you hit your profit target, start looking for something else, either to get into the trade again, going in that same direction, or a reversal, or a totally different currency pair. And then if the trading out of a channel, if it doesn't come out of the channel, then close the trade and get on with the next trade. You don't have to have 100 pips profit per trade to be a successful trader. Take 5 or 10 pips here, 20 or 30 pips there, sometimes 200 and 300 pips another time, but only take small losses each time if you're going to have to take a loss at all. I hope you enjoyed this and learned something from it, and I'll talk to you later. Bye.